that's going to be about a 6.5% increase in the cost of transport, in the cost of goods in the country, in what you and I are suddenly going to have to find to pay extra in terms of whatever we buy.
According to the Road Freight Association, more than 80% of medicines, food, goods, and fuel in South Africa is transported by roads. There is news that local tire manufacturers have applied for the imposition of additional duties on passenger, taxi, bus, and truck vehicle tires imported from China. Such duties would have widespread effects on South African consumers, businesses, and businesses involved in the road freight sector specifically. Joining me to unpack the issue is Gavin Kelly, the CEO of the Road Freight Association. Gavin, thanks very much for being with us. What can you tell us about the duties, maybe some of the rationale behind them, and how you feel this could impact your members?
The rationale, that's the difficult one. We've been asking questions for some time as to how this started and why this sort of challenge or application to prevent the so-called dumping of Chinese tires came about. It certainly came as a surprise to us, and I know a lot of other people involved both in the transportation industry and in the tire industry. You'll recall about 2 weeks ago, there was a bit of a press conference where there were a number of associations involved. Taxi Association was there, the Bus Association, and then the South African Tire Conference, I think they called, were also there, as well as the guys who are involved in the tires. So the first question is, why is this activity or action going to be launched against Chinese tires if, as we have been led to believe, we don't have the capacity to manufacture tires in South Africa, or definitely not at the volumes and at the different types and sizes as we require. So there's this a rather large gap, and they import tires into South Africa. One understands that there are concerns for the local industry, and I think we've seen a number of these things happening over the years. Chickens is one of them, if I can remember correctly, where we have a really flourishing local business, and the last thing we want to do is get chickens and cheap into the country, because of course we kill that industry. So that's the first question that we've had, is what's the rationale behind this? Exactly what you asked, Chris. Why are we now going into an action to prevent Chinese tires coming into the country? And if these tires are coming in at a decent rate, and I don't want to talk rates, but if they're coming in at a decent rate, is that not better for the economy, in the long run, until such time perhaps as we can create these manufacturing facilities? So that's the first question. The more important thing is that this action has raised the specter that the price of tires are going to increase dramatically. Now, that's the second question we raise, is that if you're going to have some sort of action preventing dumping of tires, and these tires are coming in at a far cheaper rate, now bringing in this action and excluding those tires, are you now suddenly going to have this huge increase in price? And again, we've been led to believe, depending on what type of tire that is, it's something between 17% and 41%. Now, this is one of those days or times when I'm quite happy, and I'm saying it in inverted commas, quite happy that we're only getting the 70% increase and not the 41%, which seems to be around the bus and the minibus taxi, and I'm sure you would have discussions with them. But let's just focus on freight. If we are transporting 80, and it's a little bit more, but let's round it off, 80% of all the goods in this country are transported by road, as soon as you have any sort of cost increase upstream, so you now find that fuel is increasing, or that tires are increasing, or wages are increasing, whatever it may be, as soon as you introduce an increased cost, that cost has to be paid by somebody. That's the long and the short. And we've done a little bit of number crunching. If this action realizes in a 17% increase in the cost of tires used by trucks, the general tires used by trucks, these are not special tires, that's going to be about a 6.5% increase in the cost of transport, in the cost of goods in the country, in what you and I are suddenly going to have to find to pay extra in terms of whatever we buy.
It's one thing when we talk about high inflation to focus perhaps on monetary policy and the Reserve Bank trying to do its best to keep a lid on that. But one should also focus on these other things driving inflation. It's not just loose monetary policy, for example, printing money. It's things that feed into high fuel costs and high transport costs, as you've very correctly pointed out. I think there's scope for government in the battle to assist low and middle income consumers to help alleviate some of those costs. So in terms of, just not imposing these higher duties in the first place, what other low-hanging fruit is there from your point of view and from the association's point of view that government could change or implement to help lower some of those administrative costs, which, as you point out, downstream affect consumers?
I love the loose monetary policy, and I immediately get a mental image, which I suppose I shouldn't share, but that's something that seems to ebb and flow very quickly. So now we're sitting in a financial period where the inflationary pressure is something we haven't seen in years. Inflationary pressure has got very little to do with the local citizen and his or her spending trends. Yes, obviously, if it's easier to get money, we're going to spend money, and that's the nature of things. But this inflation hasn't been driven by wanton and loose spending and huge credit outflows. This has had a totally external pressure, and this has been the price of fuel. And we've seen what fuel has done to everything, to things that we would have thought weren't possible. Either the price of fuel or the lack of fuel, because once your product is inobtainable or hard to obtain, market pressures push the price thereof up and what have you. And we've seen what's happened in terms of that basket that Stats SA or the Reserve Bank uses to work out what's happening now, inflation. And I'm not going to do a financial lesson here. So how do we counter that? How do we counter that as South Africans, and how do we counter that as the industry? Well, the first thing we're told to do is tighten our belts, which normally means we stop buying those wonderful huge TVs and those wonderful huge smart cars, which is all great because most of us don't buy that. The guys who do buy that sometimes actually aren't as hard hitters as we are. It's the essentials. So it's the basic foods, the things that really keep people going on a physical level and getting to work and back. Because if you can't get to work and back, you can't generate revenue. And of course, you can't buy the things you need. So the things we need to look at really are what I call the 10 essentials. So some of the things government has to bite the bullet, whether they like it or not, and ring fence the price, fix the price, if you want to use that term. Since it's not competitors, it can't be collusive, I suppose. So fix some of the basic prices. For example, a train ticket, because a lot of people use the train to get to work, or a taxi fare. And some might say, but that's unfair. But the reality is there's a vast amount of the population who need taxis and trains to get to work. And if that becomes untenable for them, they can't get to work, they can't buy food, and we know all the sorts of social evils that can come out of that.
Gavin, as a final question, just do you guys foresee other potential risks in the next few months or maybe even across the year going forward? Of course, we have periodic blockades of essential arteries such as the N3. Are you guys seeing any sort of that kind of thing on the horizon anytime soon?
Whilst there's huge pressure on the average citizen in terms of being able to look after themselves, shelter themselves, feed themselves, I think the potential for unrest is definitely far higher than what it was. We're going into a period now where, whether we like it or not, the ruling party is having its national conventions and deciding who's going to be the next top dog or the next president or whatever we may want to call it. There's going to be some uneasiness there. We've seen that. I think if the Ukraine situation doesn't resolve itself soon, there are going to be huge pressures on food and on the supply of food and supply chains. But more importantly, if we cannot get our ports working and our roads and railways working, we are going to lose that cargo. There's a lot of jobs that are going to go south with that, or we're going to lose them. And I think that's of concern. So we are really, really concerned around the civil stability in terms of what the current financial situation is doing and what these sort of international games at the Ukraine, and now China starting up with something as well, you would have seen in the last week, what those impacts both on our food security and on our logistical supply chains might then have.
Thank you very much for watching. Before you leave, remember to leave a comment in the section below, letting us know how you're trying to weather the storm of rising inflation and food and fuel prices. Also, subscribe to our channel if you have not yet done so. Your support is greatly appreciated. Until next time, this has been Chris Hattingh for the Centre for Risk Analysis. Take care.